gap right there, that right there is the sweet spot when you're bearish and you have everything behind you that's in play. It's your optimal trade entry. It's your model 2022. It's right there. And then this becomes a selling point. And then what do you have at this point? You have this low and this low. What time of day is that? 8 o'clock. So the price is rallying up against the underlying expected move or directional bias, because this move here has caused a potential reversal. So now you have relatively full lows here. But how far can it go? You have to refer to the range prior to that reversal pattern and form after the So let me slow you down because you're getting more panic, I'm sure. This is too much emotional headspace. All you're doing is you're looking for areas where they can stop people out and go the other direction. That's essentially all you're doing. And you're looking for little periods of price action where obvious highs can be targeted, obvious lows can be targeted for liquidity purposes. And in between them, or then you focus on all of the fair value gaps, the inefficiencies. That means things that we've been coloring in the rectangles. Okay. I will jump to them with experience. You'll see them more the more you do this. And because of that experience factor, you'll learn to filter out some of them because they've already been used several times. It doesn't mean that they won't be used again. It just means that the ones that are unfilled or left in a state of imbalance, like this portion of this gray box here, from this candlestick's high to that candlestick's low, there's a little bit of inefficiency, and rapidly it looks like this. That's the remaining portion that's inefficient. That little segment. Doesn't mean it can or needs to fill it right now. It's just that's the part that my eye goes to. But you still want to have the low, midpoint, this constant approaching, and the high. You want to have those levels all the time.
Order filled.
You will refer to them. If the price is trading anywhere,
Order submitted.
Today, watch and see how it uses it. It will use it again. So if you want to talk about support and resistance, these inefficiencies.
Order submitted.
You'll see them, kiss them, turn on a dime, go right to the level, stop, turn around, the bodies of them stop. Like it's so precise. It goes without question. It's laughable for anyone to say there's an anomaly. These price engines, what are they referring to? Think about it. What are they referring to? They have
Order canceled.
So what I've done is I've created a lineup where you're either going to be reaching for old highs for the express purposes of taking out or engaging that liquidity that we rested about it from the 5 stops, or going below a low or equal lows for the express purposes, going down to engage the sell side of it or sell stops. Outside of that, what are we left with? Anything that's inefficient in terms of price action. So if we have an inversion fair value gap here after these relative equal highs have been traded through, and it starts to break down, no panic. Don't worry about panicking, because there's no reason to do that. Go into this price run here. That's your breaker rate. Runs up and tags all the stops, gets people stopped out. If they were short, they're not allowed to be profitable. Or trick them into a long trade, and then when they start raking them across the poles going lower, they're unprofitable. If that's the case, your eye goes into this price run. Is there a fair value gap there? If there is, extend it forward and wait for the trade up there. Don't sell yourself short and only look for the return in the break or the low point, because it's going to trade right back up into that. And if you go back and look at your examples, maybe you've taken trades, whether you buy, demo, whatever, or maybe you've done some annotations in chart work, in journaling, and you're focusing on studying on the breaker. Go back and see if this signature doesn't appear in some of them, and maybe some of the things that you would have taken as a trade there, or maybe you've taken that stop down. This was the factor that you would see that happened. And notice that this is the only buy side and bounce sell side efficiency. And once you have a valid return here and it sells off, what you should be focusing on is all of the cities. All of the cities, until the narrative is likely to change bullish, you're focus goes to only looking for sell side imbalances, that means a down close candle that has a segment with previous candles low and the subsequent candle after it has a high that doesn't connect. And the only bridge between those 2 points is the down close candle in between. That's your fair value gap. And it's specifically a sell side imbalance, buy side inefficiency. And by having that, what that does, it removes the ambiguity. And it gives you a very specific process of saying, okay, I'm only focusing on these specific fair value gaps. I get that question a lot, even if I'm interested in students. How did I pick that one?
Order filled.
Why didn't I pick this one over here? Well, that comes with experience, and it may seem like a cop out to some of you to do.
Order submitted.
Take the honest truth. But there's some things that you're going to have to get with experience. And I don't make any bones about it. I don't sugarcoat it. We're going to pick it up because we're doing it. But to get that experience that's required to do a lot of things that you're asking for answers, you've got to do what I'm showing you here. And you can do it after the fact. You can go back and look at it, and yes, you have the added benefit of hindsight. Don't discourage yourself in that, because anything you learn, every surgeon that ever did a surgery on you,
Order filled.
studied in a book. They watched other surgeons do it first. Then they worked on a cadaver as a dead body. Okay, or if they cut some artery or something, they make a mistake, the person's not going to assume will malpractice or die on the table. They're already dead. So they're demo trading with the corpse. They were demo surgery with the corpse. But when you start looking for it, there's specific fair value gaps here that I want you to focus on. Okay? The very first fair value gap prior to a stop line always have that unlabeled. And that's why it's colored red here. Because this is a change in a direction. And what this is doing is acting just like an order block. It's just changing the state of the label. So I'm incorporating narrative where the market goes up at the 7 o'clock, stop line, change, breaks lower, comes right back up into inefficiency, but to a very specific fair value gap. It's the first one prior to a stop line. Okay? There's going to be lots of times where this doesn't form. That's okay. If it doesn't form, what do? Throw everything out the window and start trading some.
Order filled.
There's nothing's going to work. I had to toss that in there. Because some of you are falling asleep.
Order submitted.
This fair value gap, okay, if it's not there, then you use the break.
Order submitted.
But your stop needs to be above the highest high of the consecutive candles, because this is all the bearish break. Those are these candles here. So your stop has to be above that. Okay? How much? Oh, two ticks, maybe? 1 tick. Many times I've used this to high. Because if it's really good, it really won't like to go back up into the full range of that. So using the very high of that. We can make, in our case, it be fun. Not if you have this gap here inside the label as a stop line. Because if you have that, you could potentially see a whole return back up into this and maybe a little low off of it. A little kind of spike above outside with the width of the candle, but the body be inside or below that gap. So that's all part of stop line. So it's not offsetting the motion chart. But that changes the state of delivery, meaning that we went up to stop out, and then this is where everything algorithmically changes. Now we're going to start going low.
Order filled.
Sell side of the it's going to reach for sell side. It's going to expand low. So you want to key off of and look for turning points for what will be future.
Order canceled. Order canceled.
Off of these sell side imbalances by inefficiencies. Every single city, every single
Order filled.
So why do you want short-term high movement? Even if it's a singular one. Because there's stops above them. Okay? We already have a relative equal high here to form, and it caused a potential reversal that moves lower. It seeks liquidity. We have relative equal lows here, it traded down through that. And then we have all this business in here. We swept below that here, which is kind of swampy. Well, whatever. You're not paying for it. I'm doing something extra. I will be done sooner. My wife's probably thinking, said he's going to do this next time. It's invariably going to happen. If I say it's going to be a little one, it's going to be a long one. But I really can't do a 2-hour one with that. So,
Order submitted.
he says one thing and next thing he changes his mind. That's what it's like being in my mind. It's a beautiful place. So every cell side imbalance, notice how this one here, what is this one? What's this here right here? My classification and
Order submitted.
it's a bi-side imbalance, cell side inefficiency. I'm not looking at that. I won't highlight that one. I won't extend it.
Order filled.
It's against the underlying direction and the state of delivery, which is it wants to go lower. So if it wants to go lower, I'm not interested in this unless it shows me that it wants to reverse and it's done something very violent down here. It could do it.
Order filled.
But if it did something violent and started to reverse, then I would draw my attention to this one because then I can have on that as an inversion period right now. This is a reverse roll. But right now, when the narrative is in motion, every cell side imbalance, bi-side inefficiency, I'm referring to. I'm not always drawing them out on the chart because, as you'll see, it can be rather busy on the charts, and I like to keep things a little bit more clear. So when you're trading, when you're observing price action, you're spending your time not pushing the buttons on the trade. You're not trying to convince people in live chats, in your chat window. You're not trying to tell influencers what you think is going to happen because you're going to wait for a high five, like, yeah, bro, or yeah, sister.
Order submitted.
You're in your own little bubble every single day, and you're looking for these things to unfold. Now, if you recall, I mentioned yesterday. At 8 o'clock, it's the same thing.
Order submitted.
I talked about the first 30 minutes after 7 o'clock and after 8 o'clock and after 9 o'clock. That is your pre-session range. Okay? It is 30 minutes of you expecting something opposite. So in other words, if you see relative equal highs, what would you expect after 8 o'clock? You would expect a low or a pricing line lower.
Order submitted.
Opposing directional run. That's against where you think it's direction going to go. That's what you just said. That's manipulation. It's something that goes against
Order filled.
of what you're expecting. Not what everybody else on the internet's doing, but what you're expecting. Right? If you look around yesterday, everybody's titles on YouTube had stock market crashed. And I was in here telling you it's going to go up. Is that random? No. Because everybody had the same idea. And I sat down with you and explained to you this is what it's going to do. And we wait for it to present itself. And then we put in motion a plan of where the next foothold or the next grab point, like rock climbing. Okay? A rock climber looks at the surface of the cliff that he's trying to climb, and he looks, or she looks, and tries to map out a pathway. Okay, I am not going to just reach up this grab point here with my hand and pull myself up a little bit and then guess where the next handhold is going to be. They try to map out because they don't want to get to a point climbing up using all that energy and then find out they're really not in a position to grab onto something that's more efficient for the climb to go back up. Well, in this case, we have a descent. Even though they were not trying to trade relative equal highs and lows prior to 7 o'clock in the morning, if this does this and it starts to move lower, you have to incorporate the range. What range is that? The low that was formed prior to it crossing the threshold of 7 o'clock in the morning. So we have all of this run here. So every single one of these inefficiencies over here, 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 even though it's been used already, you extend them in time. And they will be places where you can anticipate price going up to and pushing into it and then resisting and going lower. works and gravitates to that area. So that's actually that area. But the range, okay, the pre-session or pre-market range after the top of the hour, whether it be 7 o'clock, 8 o'clock, or 9 o'clock. These are your 3 windows of opportunity. So right away, we can study and see, okay, there was really nothing in here except for these 2. Right here, these 2 smaller ones. So what did it do? It rallied up. Where did it go to? Some random level. Nobody could have known.
Order filled.
But now you do. You had a stop on, market broke down. This is a shift in market structure. Okay? And this is a optimal trade entry. Even if you didn't have all the stuff I'm teaching you here and amplifying it, you already know this. This was the flagship pattern of my channel since 2012. The optimal trade entry. A shift in market structure. Measure your high to your low, 60 to 72%. You're tracing it. 62 to 72% tracing level, and 7.5. So this is one of those moments where I would hit Control and tap N, and I'll have to go back and listen to the audio and edit and fix that part. But it's live, so I have to keep going.
Order filled.
Tapping me in the shoulder. But this is still a pattern that you would have traded anyway with using the rudimentary level lessons that I taught over a decade ago for free on YouTube channel. But now you're learning the signatures that present a greater degree of precision and managing your expectations in the narrative. How are you going to incorporate all these things and trust holding on to a trade? So now we're going to go into we have a
Order filled. Order canceled.
Listening to a phone that's on Do Not Disturb. I was still getting a flash on the screen. I looked at it and just think that that's not very much to it. But each hour at 7 o'clock, in this case 8 o'clock, and 9 o'clock, what you're doing is you're starting the whole process all over again. You're waiting for relative equal highs to form or identifying relative equal lows. At 8 o'clock, you can look prior to 8 o'clock. You just can't look prior to 7 o'clock relative equal highs or lows because you're trying to work inside the range of the morning session. Okay, the morning session is essentially 7 o'clock to 11 o'clock in the morning. Technically,
Order filled.
11 o'clock for me. I like to be done by that. Frankly, I like to be done by 10, 15, 10:30. If I can get something on and be paid out, I'm done. I don't need to do anything else. You may not like that. You might want to be for the whole day. Not me. I don't want to be on the charts. I don't like to be changing on the charts. But once you have a turn in the direction of this, and the market's likely to draw lower, you'll see that by focusing on only one side of the marketplace with the inefficiencies, as we have here, it's moving lower.
Order submitted.
Is extended to the right. Okay, if you remember on Twitter, I would tell you note a specific fair value gap, and I'd say extend it to the right. That's this. That's me doing this here. Okay, and whenever you see the market trade, through them a little bit, you'll see a troll or someone that has no idea what the hell's going on. They'll say, "Oh yeah, he thought it was going to sell." That's not what we're doing here. You're going to wait for it to cover over top of it, and then break back down through it, and then it will act as what you expect it to do. Many of you, when you see me talk about inefficiencies, fair value gaps, cities, bases, all those, you anticipate that it's a matter of just going up. Once it gets into here, all you got to do is sell short right there. That's not it, folks. You have to anticipate a measure of manipulation. What was the price doing here? I told you it was getting kind of sloppy. We had this inefficiency, yeah, but what else is there? What else is there? You have this energetic drop that created that signal, and there's going to be what trailed there. For anyone that's short, you're going to put your stop loss right there. Well, that efficiently been removed with this bump here. Back into an old civvy, and then you have to mark it break down. Look at the work around the halfway point.
Order submitted.
The market drops, opens again here, breaks lower. We have an inefficiency. The bodies are telling you, yes, this is going to go lower. Why? Because it stopped right there. See that? The wicks are allowed to do what? A little bit of damage. Does it go into random locations? Nope, it just bumps the bottom of that city right there. And then works low. Now, at 9 o'clock, the same thing. You can look at any relative equal high or low prior to 8 o'clock up to 7 o'clock. If you're going to be trading with longer term price runs, for the folks that are asking, how do you hold on for longer trades? In that case, you're going to have to look at the previous day's range and what is the previous day's low, or if it's going higher, what's the previous day's high, and that's your next logical level to reach for. But I don't want to give Caleb anything beyond the scope of what I already covered because it's giving him way too many things to worry about, and if you're brand new, you're probably feeling that too. But
Order filled.
What you're doing is at 7 o'clock, that starts the hunt for relative equal highs or lows. If you see a disruption like we were talking about yesterday where it's jagged, you see how it's nice and jagged? That's indicating it's probably going to go the opposite direction. Especially if you have all these other supporting factors where that would have been a breaker. This is obviously a high probability inversion of the value gap. And it hits it here, respects constant approachment, breaks down, and then we have another returning here, the optimal trending tree as well. And everything is, your mindset is, okay, I'm looking for lower, I'm looking for lower, I'm looking for lower. And it breaks lower. And then you highlight every single time it creates an inefficiency where it's a big candle that doesn't have any overlapping with the candle prior to it forming or the candle after. So it creates that inefficiency, that imbalance. And then when you have these long protracted consolidations like that, it's really better for you to sit still. Let them do whatever they're going to do. Why? What do we have there? What did I say yesterday? We have relative equal highs and we have relative equal lows. You're going to be playing the breakout game. And I'm not a breakout artist. I'm not trying to guess. I want to see what the market's going to do. So by this run up, it can trade into any one of these fair value gaps.
Order filled.
It does. And does it fall out of bed? Yep. So what I would require, and you've heard me say, you'll see in old tweets where I'll say, we want to see this fair value gap as an inversion fair value gap. Well, that means that it ran above it, it's got to go below it and do this right here, that function of re-delivering to it. Then a deeper protraction lower to upset any liquidity that is resting below here. As much as and to the degree of reaching down into
Order filled.
because that's the lower. So when you have your charts, Caleb, I'm only interested in seeing anything before 7 o'clock if the range of the morning session trades to the London session low or the London session high. Other than
Order
that,
filled.
anything on your charts beyond this. Okay, that's it. So all your charts are going to have about 6 o'clock or so, just to get a little taste of what London was doing, and then everything else in your charts needs to be very, very simple. But I want 9 o'clock delineated, 8 o'clock delineated, and 7 o'clock delineated. In any formation of relative equal highs or lows, I want you to annotate them. Okay, and the way I want you to annotate them is don't use this. Don't do this. Okay, I want you to draw. Hold down shift as you drag it over, it'll keep it straight. And I want you to annotate it like
Order filled.
and choose whatever color you want. It doesn't matter. Okay? Just because that is the color I'll give this color and it's saving some time. You may not feel like it this one. Some of you guys are not
Order submitted.
going to attack now? Got it. You run it down to that. Okay. So, as it is right now, if there was any trade taken or no trade taken at all, you would do nothing because it's already done a whole lot of movement and it's back in an area where I wouldn't want to see it as a trade back in this city again because we've already done it once, twice overlapped it, respected it, and now we're back inside of it again. That is low probability. And it could fall out of bed and crash a thousand points there. It still wouldn't be a trade I took. Because it's against the rules of me wanting to use it. It's been overlapped and worked multiple times and it's done enough. So your day would be complete here and you would capture everything just like this and then you would annotate it. Like this would be an area where you could highlight or type out any observations for what you felt about this movement here. In this little area here, you would annotate in text. So you would just take the text and say something like this. Okay? And just simple little statements like this. And what you're doing is you're highlighting your focus here,
Order filled.
here, and here. And up here in this segment, you do something like that. I like how it reacted off that. So what you're doing is you're cherry picking points of reference for your journal. And when you see the chart again the next day, like tomorrow, when you sit down and look at price action, you refer to what it did yesterday. And these levels will be subconsciously retained as significant, and it'll reinforce it subconsciously as a memory worth holding on to. And then when the weekend comes and you go back to your journal and your charts and you have these little annotations, what that will do is you'll read this comment that says, I like the obvious return of price. You don't have any typos in this. That. I like the obvious return of price that the cities. You know, folks. You know, when they fight me. What'd you say, you Republican son of a bitch? Here's one. I'm probably going to vote this year. I'm probably going to vote for the first time. So you should vote too.